Today, I am here to present about introduction for this study. We examine the trend and development in the marine insurance sector in this comparison between Malaysia and development country. We may learn more about the Malaysia marine insurance market by closely examining how it functions and differs from market in development country. The marine insurance industry in Malaysia has been significant expansion. The need of marine insurance service had increased due to Malaysia's advantageous location as a significant commercial hub in the Southeast Asia. Due to its long coastline and advantageous geographic location, the country is a busy hub for maritime activity, including import, export, and transshipment.
Marine insurance has existed long before any other type of insurance. In ancient civilizations, they used the concept of loan of barterage to get the insurance-like advantages, securing them with ship and cargo. The loan will be repaid to the lender if the vessel arrives safely. However, if there is a loss, the lender will lose both the money and interest he gets. Nowadays, marine insurance is very important for cargo and ship owner to protect against losses like ship and cargo destruction. It helps to reduce the financial impact toward policyholder when such incident happens. The foundation of marine insurance can be tracked back to the Marine Insurance Act 1963. The key concept in the marine insurance included insurable interest, proximate costs, contribution, subrogation, and utmost good faith. The global marine insurance market was valued at $28.04 billion in 2021. It is expected to reach $39.87 billion by 2029. There is a growing at CAGR of 4.5% between 2022 and 2029. The market study conducted by Data Bridge Market Research include comprehensive evaluation such as import and export analysis, cost evaluation, production consumption analysis, and pastel analysis. This providing insight on market value, growth rate, market segment, geographical coverage, market players, and market scenario. So that's all for my presentation. Thank you.
Hello everyone, my name is Dharmashni Raman and my metric number is 281217. Today I'll be presenting on trade and developments of marine insurance market in Malaysia. Firstly, Malaysia has grown rapidly on maritime trades, for example like transportations of goods, vessels, and other marine related activities. Secondly, on product diversifications, in terms of insurance has a wider range of coverage options such as cargo insurance, whole insurance, and more. Thirdly, on technology adoptions in marine insurance market at Malaysia grown by utilizing the online platforms of claiming process and risk assessment. Lastly, on risk management and loss prevention in marine insurance market in Malaysia has implemented many benefits for both insured and insurer that leads to more favorable items. That's all from me. Thank you.
For developed countries such as China, China's marine insurance sector has experienced slow growth due to economic issues, slower commerce, and competition. However, the country's International Economic Development Program could provide new revenue streams. China's government is promoting Shanghai as a marine insurance center, offering tax breaks on marine freight, air cargo, marine hull, and marine liabilities, enticing big marine insurers to locate their marine operation in the city. Because of bad loss experience and premium rate decreases, the whole market loss ratio in China has been going down steadily in recent years. AM Best believes that Chinese government policies may transform the marine insurance industry, but it is crucial for adequate pricing, prudent underwriting practices, coverage terms, and risk management. Furthermore, raising demand and knowledge of marine insurance among ship owners, cargo owners, and charterers suffering massive losses such as damage to ships, cargo vessel, and terminal is driving the marine insurance market's growth. In China, Marine insurance is influenced by a variety of elements, include economic growth and trade volume, maritime infrastructure development, risk profile and loss experience, and international trade policies.
Good day, Doctor. My name is Sun Hao, matrix number 276891. I will continue the presentation with the part of the trend and development of insurance market in the United States. The first trend and development are the demand for marine insurance has been increased. This is because United States as a major economic and player in international trade has driven the demand for marine insurance coverage. The growth in import, export, and maritime transportation requires insurance protection for their cargo and vessel. Other factors such as port development, new shipping line, and logistical network expansion has also contributed to the increase of the demand of marine insurance. Next, the other trends and development of marine insurance market in United States is environmental sustainability. To reduce the pollution level, marine insurance sector has prioritized the sustainable practice and environmental concern. A severe environmental regulation are implemented by the government. Therefore, the insurance policy that cover for compliance and liability related to environmental damage are in demand for most of the marine company.
Extreme weather events pose a risk to developing nations, particularly Malaysia. Developed countries frequently have more true historical data on extreme weather events, allowing them to assess risk more accurately. They might have a sophisticated models and system in place to examine the potential impact of climate change on marine insurance. Malaysia, on the other hand, may have a relatively limited historical record of catastrophic weather events, making it difficult to estimate risk and determine appropriate premiums. In January 2020, the International Maritime Organization (IMO) set a new marine gasoline because the development of new fuels like hydrogen, ammonia will take time. Ship owners are being encouraged to transition to current lower carbon fuels like LNG and biofuel in the meanwhile. Furthermore, developed country infrastructure such as ports, harbors, and coastal protection system is usually far more durable. These investments can help to mitigate the effect of extreme weather events on marine vessels as well as the danger of high insurance claim. Malaysia infrastructure may become increasingly vulnerable as it expands, increasing the risk exposure for marine insurance firms. The marine industry is one of the oldest in the world. In marine insurance, technological risk refers to the risk of loss or damage to ships or cargo caused by technical failures or malfunctions. Dangers posed by navigation systems, communication devices, and other onboard technology are examples of this. Developed countries often have strict data management and security regulations, which may help protect sensitive client information and reduce cyber risk in marine insurance. The use of machine learning algorithms in claim analysis assists insurer in gaining a better knowledge of claim filing and acceptance trends, which may then be used to optimize the overall flow of the insurance policy enrollment process. Developed countries usually have stricter data management and security requirements, which may help secure sensitive customer information and reduce cyber risk. Malaysia have weaker data protection and cyber security safeguard, exposing insurers to greater technology-related risks such as data breaches, hacking, or unauthorized access. Developed countries usually have more severe data management and security requirements, which can help to secure sensitive client information and mitigate cyber risk in marine insurance. According to UNCTAD, 137 of 194 nations have legislation in place to safeguard data and privacy. Automation and digitization in insurance procedure are more likely in developed countries.
These include the use of current software, artificial intelligence, and machine learning algorithms for underwriting, claiming processing, and risk assessment. The introduction of such technology in Malaysia may be delayed, which may have an impact on the efficiency and accuracy of insurance operations.
Hi, my name is Siti Nurita binti Muhammad Azli. I will present the other two critical risks facing the marine insurance industry for developed country and Malaysia. The risk is human capital risk and underwriting losses. Human capital risk is the risk linked to appetite, basic understanding, and skill of people working in the marine industry. For the developed country, they have more competent marine industry market, where they have more option of insurance, and also they have their own law for the marine insurance, different from the developed country. Malaysia lack of expertise in marine insurance, lack of education and training in marine insurance, and not yet have regulatory framework in marine insurance. Next risk is underwriting losses. Malaysia have a small industry in marine insurance, thus having less risk exposure to underwriting losses. The regulatory for marine insurance company in Malaysia is controlled by Bank Negara, where the financial stability within the domain of insurance is introduced with the step to improve the risk management. However, the lack of past claim history insurance in Malaysia make the accuracy less accurate. Unlike Malaysia, developed countries have more risk exposure in the industry, as the marine insurance industry is more diverse and complicated. Although developed countries have greater amount of past claim history, they can do underwriting more accurately. Also, high rivalry in the marine insurance market result in policy underpricing in the developed country.
Hi everyone, I'm Kati. So I would like to continue this presentation by explaining about cargo insurance and hull insurance. So cargo insurance is for goods and merchandise. For example, the products that we are buying from Shopee and Lazada that being transported by sea, land or air. So for example, FeedX. So this insurance will protect our goods from potential losses such as damages, losses and theft. So it's a coverage for goods and merchandise that we are buying. So if something happens, the cargo insurance will help compensate the owner from the financial losses. Even though it compensates the owner from financial losses, cargo insurance has its own pro and cons, which is advantages and disadvantages. So let's talk about cargo insurance pro first, which is advantages. So cargo insurance, first advantages is risk mitigation and financial protection. Cargo insurance prevents financial losses during transit, allowing business to focus on their core operation with confidence. So if their losses are transferred, the business can be peace and focus on their operation, which means making money. That's the main purpose of business operation. Besides that, there's another pro for cargo insurance, which is peace of mind and business continuity. Cargo insurance provides assurance against potential losses, and it enables uninterrupted business operations and encouraging participants in international trading. And our third pro of cargo insurance is customized coverage. Okay, cargo insurance policy can be tailored to meet specific needs and providing comprehensive protection based on the cargo's nature and transportation mode and desired coverage. Last but not least, our last pro of cargo insurance is compliance with legal requirements. So cargo insurance assures compliance with mandatory insurance regulations, demonstrating responsible trade practices and protecting the interests of all the parties that involved. So let's move to hull insurance. So hull insurance is a type of insurance that protect boats and ships from damages or losses, it's like a safety net for your watercraft. Let's say if something happens for your boat, you have a boat, you own a boat, and something happens for your boat, like it gets damaged in an accident or it sinks. So hull insurance will come to the rescue, and it helps with the cost of repairing and replace your boat. This is how it works. So let's say if something happened to your boat, you don't have to bear the financial burden alone. So you have a friend, which is hull insurance. Let's talk about advantages of hull insurance. So hull insurance gives protection against financial losses. Hull insurance covers vessels damages and losses, which may help to mitigate the financial impact of repair and replacement costs, as I told you earlier. And the second advantage is liability coverage. Liability coverage damage or losses incurred by another vessels and property, personal injury to passenger, the crew members of the third parties, as well as pollution arising out of it shall be also included in the hull insurance. And the third one is the one everyone wanted, is peace of mind. Having a hull insurance in place means that vessel owners and operators can enjoy peace of mind knowing that they are guaranteed to protect themselves from accidents, potential financial losses and liability as well. And let's move to fourth advantages, which means compliance with regulation. Law and lenders often require hull insurance on ships which are financed. And let's move to another advantages is flexible coverage option. In order to take into account the particular needs of ship owners or operators, hull insurance policy may be tailored in such way as to offer varying levels of coverage and deductible. And last but not least, let's move to our last advantages of hull insurance, which is assistance of claims. In case of covered losses, and insurance may provide assistance for claims proceeding that could facilitate the repairs or the replacement of of a vessels. So now let's move to disadvantages of hull insurance. So the main thing is cost. Hull insurance also can be expensive as much as cargo insurance, actually particularly in high value vessels or those operating in high risk areas. Ocean can be very dangerous. So the associated premium can be a significant financial burden for ship owners. Next is deductible. We all learn about deductible, right? So hull insurance policies often include deductibles, which is actually requiring the insured to bear a portion of the losses before the coverage applies. Means that insured as a part of must bear a portion of losses before coverage applies. The higher deductible can result in increased out-of-pocket expenses. Next is coverage and limitation exclusion. As it's same as cargo insurance, hull insurance policies also may have limitation and exclusion, meaning certain perils or events may not be covered. Additional endorsement or specialized coverage may be incurred for the special risk. Next, besides that, we also have another disadvantages of hull insurance. Claims process and documentation. Also similar to cargo insurance, the claim process for hull insurance can be complex and time consuming as well. Besides, it's also requiring detailed documentation and estimates for repair and replacement. In the result of this, there will be delays or errors in the claim of process which can impact cash flow and operational continuity. Last but not least, the last disadvantages of hull insurance is policy renewal and underwriting. During policy renewal, insurers may reassess the vessel's condition and operating factors, potentially leading to changes in premiums or coverage terms.
My name is Xiao again with mastery number 285476, and now we continue to present the freight insurance part. The loss or damage of products while transportation is covered by a type of insurance called freight insurance. It offers protections against probable financial loss due to unexpected occurrences like theft, loss, damage, or destruction of goods during transportation. It is important because it protects against the financial losses that may result from items being lost or damaged in transit. Then, the purpose of freight insurance. The first is financial safety and risk mitigation. By acquiring goods insurance, individuals may reduce the financial burden of transportation losses. By covering the insured for the value of the products or the expense in the case of damage or loss, the insurance policy reduces the sender's monetary responsibilities. It offers security against unanticipated occurrences, including incidents, disasters, and other risks that could cause freight to be lost or damaged. Second, international protection. Freight insurance becomes especially important if you participate in international trade or follow ropes with your products. Long-distance commodities are covered. Second, protection and indemnity P&I insurance. A protection and indemnity insurance, sometimes known as a P&I club, is an organized non-profit mutual or cooperative organization that provides maritime insurance to its members. This insurance could consumer, but is not necessarily limited to property loss or damage, including harm to products within an automobile or facility used in transportation. The purpose of protection and indemnity P&I insurance. The first is financial security. In the situation of a severe incident or disaster, the insurance plan can pay for settlements, expenses, and compensations, securing the ship owner's assets and reducing the risk of bankruptcy. Second, legal support and expertise. P&I insurers frequently have a wealth of knowledge on marine law and regulations. They provide their insured clients with helpful legal guidance, advice, and support in case of a claim. Cost of P&I insurance. The highest premiums. P&I insurance may be costly even for ships operating in high-risk environments or in areas where the danger of disaster is higher.
In conclusion, a strong regulatory structure underlies the market function, ensuring stability, consumer protection, and conformance to global norms. The sector has also expanded its range of products, emphasized digitization, emphasized risk management, and faced competition from foreign insurers. My suggestion is to aim to improve cyber risk management based on the trend and change in Malaysia's marine insurance industry. Given the currently growing dependence on technology, cybersecurity must be a top priority for Malaysian maritime insurer. Accepting insurtech innovation is my second advice. Investigate cutting-edge technology to boost operation effectiveness, simply procedures, and increase customer experience. And my last recommendation is global cooperation and knowledge exchange. Encourage cooperation and information exchange with the marine insurance market in industrialization nation.